It's a brand new month. Welcome to the month of August. Slowly but surely, we're getting to the end of the year, the 8th month, and we're alive and well and doing business. So thank God for that. Welcome to 55 minutes of current and relevant business conversations. That's our mission here on Business Morning. I'm Ini John Mekwa, and I will start our business as usual from the global oil space this morning. Over the weekend, OPEC Plus approved an oil production quota increase of around 188,000 barrels per day. That will begin from September. This is in a move to complete the unwinding of a layer of voluntary output cuts due to export disruptions from the Gulf, Russia, and Kazakhstan. They've caused by Iran and Ukraine wars. Successive monthly OPEC Plus hikes over most of this year have remained largely on paper with little impact on the market. So what all of that has done, that's a plan to increase production. That has brought back down a lot of tension, and that results to 5.88% drop in the price of Brent. So we see the price at $82.76 this morning. For WTI is 6.65% down at $79.08 a barrel. Although OPEC Plus sources said before the meeting that the group would likely pause output increases for the fourth quarter, a statement made no reference to what might be agreed for the last 3 months of this year, 2026. And still connected to that, back here in Nigeria, Dangote Petroleum Refinery has received 23 crude oil cargoes totaling about 2.04 million metric tons and 7.16 million barrels between July and early August 2026, with Nigerian grades accounting for nearly 70% of scheduled deliveries. This is according to a vessel movement schedule reviewed by petroleumprice.ng. The schedule shows that 16 cargoes originated from Nigerian oil fields, while 7 were sourced from overseas suppliers, reflecting the refinery's continued reliance on domestic crude alongside imported grades to sustain operations. The deliveries began on July 2nd with the arrival of Aristokils, which discharged 138,532 metric tons of Bonny crude. And this was followed by Advantage Spring, carrying about 950,000 barrels, Utapate crude, and then others also followed with 950,000 barrels of Kwaibo crude, all between July and August. A look at the market, weekly equities for last week. We saw a negative close. That's what the market closed at. A summary of it. We saw a drop, 0.84% down the all share. Mostly, I think it was just one trading session that had a positive close last week. We hope it won't be like that this week. So the all-share index closed at 247,283.68. The market cap lost 0.79% in value, and so dropped to 158.326 trillion naira. Activity was all of the green. Volume at 5.11 billion, value at 404.782 billion naira, and deals in total for the 5 trading sessions of last week was at 285,222. Look at the sectors, and you saw where those reds came in. Banking, for instance, had a drop, 0.69%, but it was larger for consumer goods. Consumer goods lost 2.29%. Industrial goods was also down. Insurance, perhaps because of the deadline. We know that Friday was the deadline for the recap exercise in the insurance industry. Perhaps that drew some attention, to the sector. So we saw it close in the green, 1.72%. Oil and gas also closed in the red. Top gainers last week: Crude Communals PLC, Coronation Infrastructure Fund, and Thomas Watt PLC. Top losers had Association Bus Company PLC, Fortis Global, and Triple G and Company PLC. In top trades, of course, we know a lot of activity around First Whole Coal last week. Mr. Otedala, for instance, did 2 major purchase of equities, placing him as owning 26% of the bank's shares. Ava Capital also made it to top trades, as well as Access Holdings PLC. And talking about insurance now, the National Insurance Commission, NICOM, they've announced the successful completion of the 12-month insurance sector recapitalization exercise undertaken pursuant to Section 15 and other relevant provisions of the Nigerian Insurance Industry Reform Act, NIRA, that was signed last year, 2025, on July 31 by President Bola Ahmed Tinubu, and it's all part of his administration's financial sector transformation agenda towards attainment of $1 trillion economy by 2030. The successful conclusion of the exercise marks the defining milestone in the transformation of Nigeria's insurance industry and signals the beginning of a new era for insurance in the country. It represents a major step towards building a stronger, more resilient, adequately capitalized, professionally governed, and policyholder-focused insurance sector that's better positioned to support national economic growth, deepen financial inclusion, mobilize long-term investment capital, and contribute meaningfully to the stability of Nigeria's financial system. The verified outcome of the exercise, according to NICOM, indicates that 43 insurance and reinsurance companies successfully met the prescribed minimum capital requirement. However, 8 insurance companies that submitted evidence of compliance shortly before the statutory deadline are currently undergoing final verification and regulatory review, and this will be concluded within 14 days. NICOM believes that the insurance industry is now entering a new phase of development founded on stronger capital, improved financial resilience, and enhanced capacity to underwrite larger and more sophisticated risks across strategic sectors of the economy. The increase in minimum capital is set to improve insurers' ability to honor policyholders' obligations promptly, absorb emerging risks, support infrastructure and other long-term investment, and compete more effectively within regional and global insurance markets. And a bit of corporate now. Odua Investment Company Limited has formally inaugurated Dr. Tajuddin Tola Kasali as its new group chairman, completing a seamless leadership transition that reinforces the conglomerate's commitment to corporate governance and institutional continuity. The inauguration took place during the Board of Directors meeting and follows the earlier announcement of his appointment at the company's 44th annual general meeting that was held in June at the newly redeveloped Premier Hotel, Ibadan. Dr. Kasali succeeds Otumba Bimbo Ashiru, whose 4-year tenure as chairman ended in line with the company's governance policy of rotational chairmanship among the 6 shareholder Southwest states. However, Otumba Ashiru remains a member of the board until 2028, when he will have completed his second and final term, thereby ensuring continuity, institutional memory, and strategic stability. Dr. Kasali has served as a director of Odua Investment Company Limited since 2020. He is a distinguished medical practitioner and accomplished public administrator. He has expressed gratitude to the board and shareholders for the confidence reposed in him and pledged to build on the bold and solid foundation laid by previous leadership. He identified as immediate priority the implementation of the SRC 2.0 strategic framework that's supposed to run from 2026 to 2030, developed under the chairmanship of Otumba Bimbo Ashiru, and anchored on the philosophy of sweat, repurpose, and consolidate. The strategy targets 30 billion naira in cash-backed profit before tax and 1 trillion naira in total assets, 50 billion naira in group revenue by 2030, positioning Odua Investment Company Limited as one of Africa's leading regional investment conglomerates. Last week was a busy one for emerging markets. In Abuja, Nigeria's capital, 2 days, Abuja became the hub for conversations on the future of Africa's economy. Policymakers, central bankers, finance ministers, global institutions, they all gathered for the 7th Africa Emerging Markets Forum. And the theme, building resilience amidst geoeconomics uncertainties, that was the theme of conversations had there, and a lot did come out of there. Our correspondent in Abuja, Sarah Chimugu, was there and put together a summary of the two-day meeting.
The 7th Emerging Markets Forum is a hybrid event that gathered over 100 global policymakers, central bank governors and economists to tackle Africa's economic hurdles amidst shifting global trade dynamics.
Distinguished guests,
the opening conversations focused on how Africa can take advantage of the global shocks to strengthen fiscal and monetary policy.
Nigeria's experience over the last 3 years illustrates what difficult but necessary structural reforms can achieve. The foreign exchange market has decisively shifted away from multiple administrative windows and an incoherent managed regime towards a transparent, market-reflective system anchored on price discovery.
Africa stands at a critical moment in its development journey. The choices we make in response to global economic change will influence the prosperity and opportunities available to the future generations.
Why you, if unless you already done, go to our website, Emerging Markets Forum website, and download.
In her presentation, the Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala, notes that Africa is rebounding, but growth remains fragile. However, she has a warning for governments across the continent.
Reforming the multilateral trading system and broadening the global economic base are deeply complementary. To attract the kind of investments we've been talking about, developing countries will need to improve their business climate, upgrade hard and soft infrastructure, and provide a stable macroeconomic environment.
The centerpiece event featured the Governor of the Central Bank of Nigeria, Mr. Olayemi Cardoso, and the Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala. The conversation focused on Africa leveraging its young population and the African Continental Free Trade Area to attract investment despite global headwinds.
We should be thinking our trade with the external world, not just the US, on things that are non-oil, is improving, but could do so much better. We need to expand the sources of growth in the economy. We need to expand the sources of trade. We need to add value to our products, and we need to trade more.
Creating opportunities for younger people, ensuring that you had a more open, transparent, good, clean governance that would be able to put on right policies and be able to save an economy from collapse.
The second day of the meeting focused on Nigeria and the biggest question from citizens and investors. Where did the savings from subsidy removal go?
Tell us what the plans are to translate.
Because it affects the price of fuels and fertilizers.
Stability that Nigeria has achieved
for the economy, tell us
over
what
the last 3 years
to translate
into convert this stability into a broadly based growth that will help Nigeria's poor,
that Nigeria has achieved over the last 3 years,
through fiscal transfers,
into convert this stability into a broadly based.
The minister responds. According to him, part of the savings has been absorbed by higher debt servicing costs, with borrowing rates rising from 8% to as much as 24%. Wage bill also nearly doubled after the minimum wage was increased to 70,000 naira, while spending on education loans now covers tuition and stipend for over 1.5 million students.
Because the reforms induce higher prices, interest rates went up. So instead of paying 8% on our debt, we're paying as high as 24%. When you need to service debt, you don't debate it whether you need to pay. You can't negotiate it. You pay, and you pay on time.
The conversation then moved to food and price volatility, identified as one of the greatest threats to emerging markets. Panelists made some recommendations.
Access to market is actually a precursor to solving some of the problems we have in food, especially when it comes to food inflation.
So ownership for me, it's
in anything that we are doing.
in panel
if you don't own
and pull them
the
together.
ideas,
So countries
if
like
you don't
Rwanda, Sierra Leone,
internalize
DR
what we are
Congo comes to
doing,
mind.
we fail.
But in the
So first
post-crisis
thing
countries,
I would advise
fragile economics,
the young generation
households
is
spend
trust yourself.
50 to 70.
As the 7th Africa Emerging Markets Forum ends with tough questions and tough answers on subsidies, debts, and poverty, the charge to policymakers is clear. Show results. Sarah Achimugu, Channel Television News.
It was certainly a busy week, and of course a whole lot did come out of that. We're going to try to touch on some of those issues, especially by the minister right there. But first of all, last week we did have the Chief Executive Officer of the Delta Special Economic Zone on the program, and he told us about the event which begins today. That's the Delta State Economic and Investment Summit. Well, it begins today, so for our DSTV viewers, I'll be taking you to Delta State, where that summit begins, and the theme is harnessing our strength, unlocking our potentials. That's what is going to be the conversation. But if you'd like to continue right here on Business Morning, please just go to our YouTube channel and then jump to the next channel right there, and you will see here. But for our DSTV viewers, we hand you over to Delta State for the State Economic Summit. So now let's look at some of those issues that came out of that forum last week, by especially the one by the minister. And of course, he mentioned subsidy, and everybody's ear came out. So there you have it, some quotes from the subsidy, from Mr. Oyedele. He said that the combined impact of subsidy on fuel and FX was gulping about 5% of the country's GDP. And so the removal of those subsidies, of course, we know the unification of the FX rates, he called that subsidy also, that's supposed to have saved the country about 5%. You save money, but saving money, he said, wasn't the primary objective. It was eliminating the distortion and corruption which came with those subsidies in the system. I said it's fundamental, but money saving is also important. He also did say that many Nigerians will simply compare the past with the present and conclude that the reform is not working for them. Some would even say it's a bad reform. What we don't normally compare, or the question we usually don't ask, is what would have happened if the reforms were not carried out? And what would have happened then? And then he said it should have been counterfactual. Then he said before the reforms, we're printing money to spend, interest rate about 8%, minimum wage at 30%. Now, if you just think about those three, these are big numbers. And if you stop printing, then the spending doesn't disappear. You still have to spend, and you need to finance money you were printing before. Now, that was part of where the savings went. That's it. And because the reforms induced higher prices, interest rates obviously went up. So instead of paying 8% on our debt, we are paying 24%. That's part of where he says the savings from the subsidy is going for. And he also talked about, of course, servicing of debts. That when you need to service debts, you don't debate it, whether you need to pay or negotiate, you can negotiate it. A minimum wage has gone up from 30,000 to 70,000. That's about double wage bill for the government. That's another place where the subsidy savings has gone to. And also, he now talked about NEL Fund, another avenue where the subsidy is going to. About 1.5 million students have received not only their tuition but stipend on a monthly basis. So, but he did promise us that we will have a more elaborate and detailed record of both the spending and what it's being used for since the subsidy has been removed, both from the FX and from petrol. So of course we'll be expecting that. But first of all, let's see if we can get some reactions to this, and we're getting this from the Chief Executive Officer of the CFG Advisory, Mr. Tilewa Adebajo. Mr. Adebajo, good morning. Good to have you on the program.
Good morning.
Yeah, so I mean, since the removal of subsidy, a lot of Nigerians have been waiting to really hear. So, what has happened to these monies and all of that? And I guess Mr. Ayedele, the minister, did try to give us a little bit of highlight of it, even though he promised there'll be a more elaborate conversation on what the savings have been and what they have been used to. I wonder if you heard that and your comments or reaction following what he has shared.
Well, you see, this is a very sensitive matter because I think the essence of the reform program was that the subsidies that were removed were going to go towards development and, into investments for the benefit of Nigerians. But unfortunately, there has been no clarity as to those numbers. Because I think what should have happened is the fact that I think these numbers should have been quantified. We cannot just say that the allocation to state governments has increased because two things happened at the same time. You remove the subsidy and also there was a massive devaluation of the currency. And when I talk about massive, I'm talking about over 150%. That the official rate went from about 4,500 to about 1,800 before it has now settled down at 1,360. So what you have in the system is what you call money illusion. And when you have money illusion in the system, you tend to confuse the nominal value of that money with the real value, which has to do with purchasing power. And to excavate matters, around about the same time, because of the way those reforms were implemented, inflation hit close to 35%. So the triple effect of removal of subsidy, currency devaluation, and inflation going to 35% has just created a money illusion. So we're seeing a lot more money, and we think that that money has real value in terms of real purchasing power. But what we have is money illusion. So I think what is important for me now is for us to have a serious discussion on this with numbers and figures. The last 3 years, the budget deficits have been significant. Right now, the budget deficit, from my own understanding, is close to about 35 trillion naira. And financing that budget has become quite significant. And the government borrowing has gone up significantly to the extent that domestic borrowing is probably going to hit a record high of 20 trillion this year. Half year, we had already borrowed the same amount we borrowed last year. So there's pressure on the domestic bond markets for government raising money. So we have a significant fiscal imbalances that the Minister of Finance needs to address. It's not just the subsidy savings, because for the last 3 years, they have not also been able to fund the capital budget. So there's significant revenue shortfalls, given the fact that, the sort of budgeting that they're doing. And, to make matters worse, debt service is now the highest line in the budget. Debt service ratios now are going towards 90%. And the debt service budget this year of about 16 trillion is larger than the defense, education, health, and infrastructure budgets combined.
Now he has promised us that in a short while, we're going to get a more elaborate record of all of this. What would you expect to see for it to be satisfactory for someone like you about, yes, I know you said it's beyond the subsidy, but let's just finish with this first. What would you like to see in the account of subsidy savings and spending since removal of subsidy?
Well, what I would like to see is the fact that you have had a shortfall. It's not even like a 50% or 60% shortfall. You've had close to 80 to 90% shortfall on capital expenditure spending over the last 3 years. That is a major concern. And then you have been borrowing significantly. If you take a look at, my own borrowings, the way I look at borrowing is very simple. You see, what I would like to see, first of all, is the real numbers, because we've seen your revenues and there's been a lot of opaqueness as to how the government revenues have been coming through. We've seen your budget for the last 3 years. That is where the numbers are. And those budgets have significant deficits. So that is, first of all, you need to explain your deficits. You know, are you over budgeting? Are you budgeting more than what your revenues can support? Because, you know, you have significant deficits over the years. So first of all, I would like him to address those deficits. That's number one. Then when you address the deficits, then you can now address the borrowing. Because if you say you have made that kind of money, what my own estimates of subsidy savings was between $10 to $15 billion a year. That is the savings. That was what the subsidy range was, what we were paying. So the question now is, what has happened to that $10 to $15 billion? That is what I want to understand, because that's what I know is the level that we were paying subsidies, anywhere between $10 to $15 billion. That's the savings. So if you are now budgeting beyond that, then we have significant challenges.
So if we look at it as a whole, the fiscal system, government, you mentioned government revenue, the borrowings, would you say there's an issue around fiscal transparency? And it's not just about the federal government. We can actually look at the state government and we would see similar scenario. Would you say that as a country, there's the issue or there are issues around fiscal transparency, or is it just the sharing of the information with the people that you think is the issue?
There's the fiscal transparency is guided by laws. Do you understand what I'm trying to say? So there's what you call the Fiscal Responsibility Act. And these budgets, for instance, so the first thing the minister has to address is you are in violation of the Fiscal Responsibility Act. You're also in violation of the Appropriations Act. So if we have challenges in the system, what are we doing to basically modify the Fiscal Responsibility Act? The problem in Nigeria is not the transparency, but we have what you call a Fiscal Responsibility Commission. This Fiscal Responsibility Commission is the commission that is supposed to be empowered to be able to pick up the red flags and say, okay, you've reached this limit, you've got to this headroom, you need to stop here. That Fiscal Responsibility Commission today is powerless. So when you have a fiscal responsibility that is powerless, government exceeds its fiscal limits. So the Fiscal Responsibility Act is clear. It's a financial circuit breaker to manage fiscal issues. But we're not following those rules. So that's the first thing the minister has to address. The budgetary system is very clear. Budget performance has not been reported. That's the first thing. If you record budget performance, if you say you do a budget, you are supposed to report budget performance every 2 to 3 months. But the budget office is not doing that. Now, as I'm speaking to you today, we're now in August. We have not been able to come up with our half-year reports because the Nigeria Bureau of Statistics has not released data on second quarter GDP. So how do you know how the economy is performing when all the statutory agents are supposed to give you information on the economy don't get this information out? So we have to extrapolate this information, we have to restructure it and put it together. For instance, the Bank Office has not told us what the debt profile is since December last year. So you have to add on to what they're doing and look at their monthly auctions and see what they're doing to be able to tap on what they're doing to know what's going on. So it's more than transparency. So what the finance minister needs to address is the breakdown of the process. Because we have a process and we have to go back to that. We follow that process. That is what we depend on from the public side. It is information that is released to the public that we look at. So all these your increased revenues that you are allocating to the state governments, that's money illusion. That's as a result of inflation, devaluation, and removal of subsidy. That is why you are seeing where that money, and then the foreign exchange. you are looking at changing all this money there. So yes, there are issues with transparency, there are issues with accountability, and there are issues with process. So these are the three things that need to be resolved.
So much for sharing that, and we do hope that the minister, perhaps this will get to him, and when he comes out to give us the breakdown of the subsidy savings, he will go a step further to deal with the processes also. Thank you so much for your time and your views. The Chief Executive Officer of VCFG Advisory, Mr. Tilewa Adebajo.
Good morning.
All right, so our next conversation would be on Nigeria's middle class. There's the story that's fast disappearing. That's if it's still in existence at all. We'll do that with two businessmen, but that'll be after the break. Please stay with us. You're welcome back. So we have two gentlemen who have jackpot from Nigeria. Now, one of them, when I was on the Bank of Industry program, used to go to his factory in Kaduna State, but today he has relocated to Canada. And then there's another man also that he has gone to the United States. He used to have a company running here in Nigeria, but both of them have jackpot, and they're supposed to make up part of the middle class. So I'll introduce you to them in just a bit, but first let's meet Nigeria's middle class. So Nigeria's middle class estimation says that about 40 to 50 million people, that's about 17% of the full population, are supposed to make up that middle class household, approximately 8 to 10 million. They very active in the sectors, the banking, ICT, telecoms, oil and gas, healthcare, manufacturing, and education. They're supposed to drive consumer spending and housing, retail, digital services, investment. And then also characteristics, most of them are salaried professionals in those sectors I mentioned earlier. There's a growing ownership of homes, cars, smartphones, internet-enabled devices. They are the ones who majorly drive the consumption in financial systems, insurance and all. Increased participation in investment products. You know, when we say the domestic market or investors are more, the stock market is mostly those, apart from those institutional investors. When it comes to businesses, MSMEs, they account for about 96.9% of all businesses in the country. They contribute about 46.3%. Look at the disparity. They are 96.9% of all businesses, and yet they contribute less than 50%, unfortunately. They account for about 87.9% of national employment and account for 6.2% of Nigeria export. Now, Nigeria has lost a bit of this because, among others, these two men have left Nigeria, even though one of them still has a business running right here in Nigeria, but they have jackpot. And with all the resources, both human and mineral, that they could have added value to. And that's the Chief Executive Officer of Twinkle Star Simplicity Limited, Mr. Ernest Asemota. He's now in Canada. He used to be in Nigeria. I visited his factory when he was in Kaduna State. And yet, Mr. Asemota has left us in this country. Mr. Asemota, that's not fair.
Right, yeah.
Okay, but let me also introduce Dr. Samuel. Dr. Samuel Etim, I don't know him personally, but he also used to run a business here in Nigeria. He's in the US now, in Texas. He's the Chief Executive Officer of our visionary projects. And these two men have depleted Nigeria's resources by relocating. Dr. Etim, what did we do to you?
Well, good morning, or good afternoon, sorry.
Good morning. It's good morning in Nigeria, actually.
Very good. Good morning. Just waking up.
So why did you run away from your motherland?
Firstly, let me say thank you for having us. Secondly, not Jaka.
I can barely hear you, Dr. Etim. I don't know what the issue is. Dr. Etim, can you hear me? Okay, but maybe you would, I don't know what you would do. Maybe you want to use the device directly instead of having that, be- because we can barely hear you. Maybe you can disengage the headset and then you use your device directly. Let me just go to Mr. Semota while you do that, and then we'll come back to you. So, Mr. Semota, you had a flourishing business in Nigeria. Now you have left. What happened?
All right. Can you hear me very well?
Yes, I can hear you.
Okay. The truth is, though the business is still there, without my presence, but basically, thank God you have. We've met quite a number of time while I was in Nigeria. How we were trying to grow and fit into the Nigeria economy, especially the microeconomy in Nigeria. But you see, like what you said, it is not just because of hunger or because of we did not know what we were trying to do that we left. It was basically because of system failure. System failure. A lot of us, like according to your analysis, over 40 to 50 million people are on this business bracket. But let me tell you one thing today. Those are just main data that has not been updated. But I will tell you, it has come down so much. So it's basically system failure. That's number one. Number two is lack of support for entrepreneurs. Let me make an example. After the COVID, the last administration came up with a kind of a program. I think then they call it Survivor Fund. Survivor Fund support was a scheme that was part of Nigeria Economy Sustainability Plan introduced by the previous administration. What did they do? I think about a quarter or like 4 months or 3 months, thereabout, I can't really remember and figure it out. Because they roll out this program that everybody should load or should upload their staff strength, especially the microeconomy, the former microeconomy anyways. Upload our data, our staff strengths and all whatnot. We went through a lot of registration, a lot of upload, sorry. And for 4 months, they were able to pay the salaries of our staffs. Now, let me tell you one thing, the positive effect of that was that support for that 4 months was able to re-energize our expenditure, in the sense that we are able, like, let me use myself as an example. For that 4 months that the federal government paid those salaries, we are able to save about 2 point something million, no, 3 point something million, and we're able to inject it into that program. But after then, the government shut down. Now, if such scheme is being introduced, periodically, I think it would have helped even we are talking about the middle class now. We have even helped some of the lower class to even come up to the middle class. But let me tell you, Amy, let's be frank. We need to be blunt. We have tasted the economic issue, the economy in Nigeria. We are tasting it here in Canada. That's a huge difference. Now, we have the CAC, what we call the Corporate Affairs Commission. All what they do is just to register a business and collect annual returns. That shouldn't be. That is where the system failure starts from. I will beat on them because, first of all, we can't register a company. A lot of companies are just portfolio companies. We don't relatively have machinery, equipment, or what they do. And when you go out to pay for contract and all that, these are the people that will get it. These people that do not have equipment on ground. You understand? That is where my second reason will come from. Corruption. Corruption has become so high in the system. corruption, some
Dr. Etim, if we have Dr. Etim now, so he can also share his experience. Dr. Etim, can you hear me?
I'm hoping you can hear me this time.
Yes, it's good
okay?
now. Perfect. Yeah. So share with us your experience while you left.
Well, I was saying earlier, thank you for having us.
Good to have
in
you.
the first place. I will not classify myself as a Japa person because I've been out of Nigeria for a little while. Basically grew up in the United States after I turned 22 years old. But my experience has been basically doing experiences back home to help the middle class. That is what drives me. In essence, I think what we need to look at from the government standpoint is how do you help the middle class? Human resources is the key point, is what I want to mention. We then tap into our human resources, and that's one of the main reasons why people try to live to make a better life for themselves. If only government can put some funding into human resources, there's so many things, questions that you can ask. For example, my background is in aerospace to start with. Before I become more into business, I see a lot of need. For example, an aerospace company can hire in the excess of 150,000 people with a lot of subsidiary activity. My question to that is, why is Nigeria, for all people, not have a aircraft development program for regional jet? At least in the past 15 years, Africans have started traveling a lot by the year, but not one African country has been able to initiate a program to build an aircraft. Not singly, but we can also combine with other countries to make this happen. So those are the areas that, for me, from experience level, could help the economy in Nigeria. Because if we don't do that, we're just spinning our way of talking on the phone and doing what we don't need to do, but taking action is the right thing.
So from where you are now in the United States, how are small businesses, the middle class, how are they being supported that you think can be replicated? I know you talked about the aerospace and all of that, but look at manufacturing, for instance, the real sector. What are some lessons Nigeria can learn that you have seen right where you are?
One of the things the Nigerian government can do is create the infrastructure for that to happen. As you can attest, when you have a big business going on, it's a ripple effect to the economy. Other people get employed, other subsidiary activity happens unknowingly or by ripple factor of where the government has slowed down. So infrastructure is not only about buildings, making roads that is not even comfortable for someone to drive for even 2 hours. If they're comfortable on the road, 3 hours, any part of Nigeria, I do come home almost every year. My experiences have been either you fly, and if you don't have money to fly, you road that are not well maintained. So there's so many areas I can speak about, but just to focus on the middle class. How do you create opportunity to the middle class?
All right.
That is what drives the economy.
All right, let me come to Mr. Semota. Mr. Semota, if you were to give like 3 points of what you think the government can do now to boost the power, the purchasing power and impact of the middle class, both individuals and businesses, what do you think, learning from where you are in Canada, what do you think that can be adopted?
I will just give one. And that will at least go a long way to boost the confidence of the middle class business people. Number one, just let the government create a medium enterprise growth fund that offers single-digit interest loans within 5 to 9%, single-digit interest loan. That I used to take a lot of money from bank. I paid 27, 28. That is killing. You understand what I'm saying? That is just one of the things that we at least give a booster for this set of people. That is just the one I just want to tell the government.
All right. Thank you so much, gentlemen, for sharing your experience with us. And we hope, even though you are in the diaspora now, I know, Mr. Semota, your company is still running here in Nigeria, so at least they are still employing. But we beg Dr. Etim to also, send some diaspora remittances back home to make impact. But thank you so much for your time and your views on the program this morning. Chief Executive Officer of Twinkle Star Simplicity Limited, Mr. Ernest Asemota, joins us from Canada, while Dr. Samuel Etim, the Chief Executive Officer of our Visionary Project, joins us from U.S., Texas in U.S. Thank you so much for your time, gentlemen.
Thank you very much, Ine.
Okay.
Let's take a break and just hop over to the global space.
All right, let's see what investors should watch out for this week. That's in the global economy for Monday. The ISM Manufacturing Index, that's expected to show that activity expanded in July in the U.S., with the headline rate reading rising to about 54 from 53.3 points. The prices paid index is forecast to decline to 70 from 73.0, while the new orders index is expected to improve to 57 from 56. That's in the U.S. Now, we've seen earnings rolling out also in the U.S. This week. Spotify takes center stage today as the music streaming giant prepares to release its latest earnings before the opening bell. Investors will be watching closely to see whether recent price increase and strong subscriber growth could continue to drive revenue and profitability. That we have it there. The latest earnings. We also see SpaceX too. They're set to host a question and answer at Spotify shortly after the results are released. After the closing bell, attention shifts to SpaceX as the company is expected to release its latest financial results, followed by a live audio webcast with management. Investors and industry watchers will be listening for the updates on launch activity, Starlink's growth, and the company's outlook for the rapidly expanding commercial space sector. Also, we see this week, Wall Street would also be watching Eli Lilly as the pharmaceutical giant reports earnings and holds a conference call. That's later today. Investors will be looking for fresh guidance on blockbuster weight loss drug sales after the company raised its outlook. That was last quarter. The results could also set the tone ahead for rival Novo Nordisk earnings later this week. Then we see investors will also be watching latest U.S. initial jobless claims, one of the first major economic indicators released each week. The data offers an early snapshot of labor market conditions and could influence expectations, for Federal Reserve interest rate decisions if claims come in significantly above or below forecast. Then for Friday, employment reports is expected to show non-farm payrolls rose by 91,000, up from 57,000 in June. Meanwhile, the unemployment rate is expected to edge higher to 4.3% from 4.2%, while average hourly earnings are forecast to remain unchanged at 0.3% month on month. A stronger than expected employment report could reinforce expectations that the Federal Reserve will raise interest rates before the end of the year, which may weigh on risk assets, and we know risk assets are very sensitive there. But let's get the latest in the UK now. Joining me is Simon Pusey, and talking about the latest, EY, one of the largest multinational professional services networks, they've kicked off the week with a warning that the UK could fall into recession next year if the Strait of Hormuz remains closed. Let's hear from Simon now. Good morning, Simon.
Good morning. Yes, exactly. As you say, the Strait of Hormuz does remain pretty much closed. I'm not actually in the Strait of Hormuz at the moment. I'm on the Irish Sea, just off the coast of an island called Crude. But as you say, the Strait of Hormuz is a problem, and Ernst & Young, the consultancy giant, are warning that the UK could fall into recession next year if the strait remains closed, by 2 quarters of growth and rising unemployment and falling consumer spending. But if the strait reopens by the end of the third quarter of this year, EY's forecast suggests growth will remain fairly resilient at 0.9% in 2026 and 1.2% in 2027. It's hard to predict or plan, of course, what's going to happen as Donald Trump and his administration and the Iranians are flip-flopping so much, and there's so much uncertainty that continues.
Yeah, we're getting used to that uncertainty at this point, and at some point, maybe we can visit the Strait of Hormuz, Simon. But it's a new trading week, and it's a new month. Actually, what should investors watch out for this week in the UK?
Yeah, well, they've remained at 3.75% by the Bank of England, the interest rates, which are on hold. Inflation is the main worry this week. The consumer price index was up 2.6% in June. That's above the 2% target. The main scheduled data release for the UK this week is July's PMI surveys. That's services, manufacturing and construction. That will tell us about the potential for growth. Oil prices have fallen back today, with the international benchmark Brent crude now down around 5%. That's generally good news for inflation. But it's also important to look at any announcements this week by the new Chancellor, that's John Healey, which could impact the markets. The appointment of Healey as Chancellor is fascinating, with some senior figures in government saying that Burnham and Healey share the same economic outlook and ambitions built on a desire for reindustrialization and devolution. So it'll be interesting to see what Andy Burnham and John Healey say this week in terms of any economic announcements that will obviously impact the markets.
All right, thank you so much, Simon. I see you on the move right there, just like this week. Thank you, Simon.
Thank you very much.
All right, now to the U.S. President Trump has announced the cancellation of a planned military strike on Iran, signaling a potential shift towards imminent negotiations regarding the Strait of Hormuz. Energy markets are reacting as traders weigh the potential for a drop in oil's risk premium following the news that talks may begin. And we see China's private manufacturing sector remained in expansion for an 8th straight month in July, but growth lost momentum as factory activity slowed to a 4-month low. The Private Purchasing Managers Index, or PMI, slipped to 50.9 points from 51.7 in June, staying above the 50-point mark that separates expansion from contraction. The weaker reading points to softer domestic demand and a moderation in production, even as exports or orders showed signs of improvement. The latest data adds to concerns that China's economic recovery remains uneven and could weigh on global trade and commodity demand. And Alibaba shares climbed after the Chinese technology giant unveiled Qwen 3.8 Max, the latest version of its flagship artificial intelligence model, as competition in the global AI race intensifies. The company says the new model delivers stronger reasoning, coding, agent capabilities, and multimodal performance while reducing computing costs. The launch comes just weeks after rival Moonshot AI introduced its Kimi K3 model, underscoring the rapid pace of AI innovation in China. Investors welcomed the announcement, sending Alibaba's Hong Kong listed shares up around 6% in early trading. Looking at digital assets now, Bitcoin slipped below $63,000 at the start of the week as investors' sentiment that took another hit following a major security breach involving cold card hardware wallets. Nearly $90 million worth of Bitcoin was reportedly stolen after hackers exploited the vulnerability in the devices, raising fresh concerns over crypto security. The decline was compounded by weaker than expected earnings from crypto firms Strategy and Coinbase, while optimism over renewed US-Iran talks did little to lift the market. The broader cryptocurrency market also traded lower, with Ethereum, XRP, and Solana posting losses. And to the currency markets now, we see the British pound edged lower against the US dollar today as the greenback remained resilient despite a rare joint currency intervention by the United States and Japan to support the yen. Sterling slipped to around $134, while the euro also weakened as investors continue to favor the dollar amid expectations of tighter U.S. monetary policy. And that's what's hot in the global economy. It's back to Ini with the rest.
Thank you, Ladi. So just before we go, We see a recovery in the market at the NGX, 0.31% in the green in early trade. And we see stocks such as First Wholesale still trending positively, gaining a momentum right there. Regal Insurance is also positive, I guess, because they made it through one of the 43 insurance companies that have scaled through. Eternal Oil is positive. Airtel Africa, Abe Mortgage, they're positive. But on the flip side, we have Boa Foods, Total, Nigeria, Presco also. They've been seeing a lot of profit taking on Presco. I want you to find out what's going on there. If it's a good time to step in or not. But anyways, that's how much we can take today on Business Morning. Ladi will be here at 1:30 to take you around the world of business. But I'll see you tonight. Let's hope this positive sentiment at the market is sustained to the close of trade. I'm Ini John McCall, wishing you the best of the rest of the day.